Hello, my name is Jiwoong Im. I'm the CTO of Coinscious. We just had our event at Toronto Blockchain Week on Wednesday, and the event went very successful. I learned a lot from many presentations, and here I'd like to share the presentation that I gave at the event. It's basically some of the researches that our team did, and sharing some of the tools that we use to do, we used to do analytics for crypto market. So before we start, here's a disclaimer saying that all the information contained here is for the informational purpose only and is not intended as a research report or investment advice. And Coincheck or its partner, director, shareholders, or employees shall not be liable for any damages or expense or other loss you may incur from this presentation. So first, let's talk about three basic questions: where to trade, and what to trade, and how to practice trade. So I'm gonna start with the where to trade first. As many of us know, in March, Bitwise Asset Management Fund released a report. It basically outlines some of the problems and misconceptions that in crypto industry, and one of the interesting claims that they make is 95% of volumes is fake and on or non-economic in nature, and that the real market for the Bitcoin is significantly smaller. And the way they back up this argument is main reasoning as follows. So here is they're gonna try to look at the trade size histograms. So they're gonna look at the shape of how the distribution over the trade size look like, and what they define that the natural patterns of distribution that should look like is something like these figures, where the trade size frequency decays exponentially as the trade size gets larger. Whereas the bad ones are some suspicious exchange that they claim has histogram shape looking like this, where they have either very high end tails or they have very weird shapes. So based on this analysis, they present 10 exchanges that have actual volume. Here they don't really define actual volume properly. However, I think it is somewhat good ways to filter out the ones that that look suspicious based on the histogram shapes. So here we're going to look at what are other ways to look for suspicious exchanges. So one example is in April 2nd, there was a huge volume and price spike, as you can see over here. And this was most of the recent price pump that we had. And basically, we're gonna look at 18 exchanges in our dashboard and look at their volume changes, which are shown in blue colors. And you can see that there's huge volume change for all exchanges, they have more than 70% or higher price change at that time, except for Fcoin, where their volume change remains low at 10%. So this type of evidence was detected multiple times, and it's not a first time, just by observing from our dashboard. Now, for a second example, we can also look at the example where we look at ETH to BTC daily volume for those 18 exchanges again, from January 16th to February 16th. And here we plot exchange volume plot, and there's one exchange volume curve that sticks out from ZB. And so we look into what's going on there. So we plot exchange based on the first two principal components, and what the principal components here, first two principal components explain 80% of the variance of exchange volume data here. So when you look at this plot, you see that most of exchanges are clustered in the bottom left, and there are some outliers like ZB, HitBTC, Fcoin, and so on. Now let's look into a more quantitative way of measuring these and then see what's going on. So we look at the volume correlation correlations between exchanges. So here in the green box, we see which colored in bright orange. We can see that those exchanges are the ones that have positive correlations, and the ones that in the blue box, colored in red and black, have no correlations or anti-correlations against those other exchanges in the green box. This means that basically these ZAF, ZB, BTC, Flyer, Fcoin, they go against the volume trends created by these majority of the exchanges in under green box. And what's interesting is that when we look at the yellow box, even within the ones that have anti-correlated exchange volume correlations, even with themselves, they are also anti-correlated. Some of them have anti-correlation, negative correlations, and I suspect that the reason could be because maybe they all run different trading bot algorithms in their exchange, and because they all have different algorithms, maybe it creates no correlation or negative correlations. So all of these materials that I've just explained are in our exchange report, and so you can find about what's dynamics of the exchanges, what's going on in the exchanges, and other information regarding volume, exchanges, and so on through our exchange report. So now let's talk about what to trade. Here I'm mainly focusing on introducing tools that helps build portfolio here. So here we look at the risk versus return plot. So we have mean daily return against the historical daily volatility in February 28th and March 28th. Here we see that first, when we look at this red line, which is slightly above 1% of mean daily return, we see there's 4 coins: Litecoin, Omega, BAT, and Ontology. They all have a similar daily return level. However, we can see that Litecoin and KB has the least daily volatility. So this tells us that if I were to consider return level at slightly above 1%, then I would choose one that has the least volatility. So basically, following that statement, then we want to choose ones that are at the most left side of this diagonal line, because those are the ones that have the least volatility among their same level, among the other returns coins that has the same returns. We can also see that XTZ is standing out. It has highest mean daily return and also has highest daily volatility. We can go into and look into details of XTZ. So for here, we're looking at the longer period of return and risk. So we can see from price change from 24 hours to 30 months. In blue curve, blue font, we see that they're constantly growing. And we can look at the volatility over 1 month and 1 year and see that they're relatively low and it's at the high end. We can also start looking into like other performance analytics like alpha, beta values, value at risk, expected shortfalls. We can look into sentiments, trends, momentums, looking at moving average over longer periods of time, and also look at the indicators and see which one indicator works the best for this asset by looking at win rates and so on, profit factors. And then here I also copy and paste their description from our Coinscious market report. So this is just one example of how I try to understand what the performance of that coin is, and I'm just using Tezos as an example and through our dashboard, Coinscious dashboard. So note that you can all these informations are available, publicly available through our Coinscious dashboard. It's freely accessible, and just you can just log in and then look for our dashboard. It's at dashboard at .coinscious.io. Now let's talk about how to practice trade doing backtesting. So before we start, we can talk about what are good performance benchmarks. So some of the benchmarks that we know are CCI 30 and Bitwise 10 in crypto space. So CCI 30 is top 30 coins based on market capitalization, and Bitwise 10 is the total return of the 10 largest crypto asset, and they're measured in and weighted by free float and 5 years inflation adjusted market cap. So now let's look into, well, if you have entered in the market and then your portfolio is somewhat similar to these two indexes, then what's the performance return rate? So here at the end, both their return rates lies around 1,000%. Now say if you have entered in January 2018, what's your performance? Which I know that most of people entered in January 18th, 2018 or December 2017. Then you see that you have about 70% to 80% loss. So what if you have entered in January 2019 this year? Then you would have your return will be somewhere along 10 to 20% according to these indexes as benchmark. Now, given that we have these good intuition about these benchmarks and returns, let's do a simple experiment where for every 2 weeks, say starting from January 2019, we invest in 5 cryptocurrencies for a week. And this means that we invest 5 coins for 1 week and then sell after 1 week. And then we're going to repeat this every 2 weeks. But the way we're going to choose these 5 coins are basically, first strategy is to choose those coins based on total returns from past 30 days, which are found in our biweekly market reports. For example, in April 15th market report, here it contains these top 5 coins based on the total return sorted, which contains Tezos, Bitcoin Cash, and so on. Our second strategy is to choose top 5 cryptocurrencies based on Sharpe ratios from past 30 days again, which can be found in our advanced market reports. So if we do that, every 2 weeks, we just invest for 1 week, and then we sell, and then we choose another top 5 coins, and then we sell. Then the question is, will we make money? Here again, so here is the benchmark. So these indexes, we enter in January 19th, we have about 10 to 20% return. And then now, if we add a strategy 1, then we would have made 80%. If we use the strategy 2, then we would have made 50%. So we can try to look into different other plots like 30 days rolling Sharpe ratio or rolling volatility and drawdowns. And to see, for example, if we see that this 30 days rolling Sharpe ratio has been constantly going down for the magenta color strategy 2, and then it goes back up, I would consider changing the strategy if it was constantly going down. So these are some of the things that you can get through our backtesting service. So for example, here we show, this is an example of our sample backtesting performance tier sheets. This is something that you would get. So for example, if you had a 100,000 initial cap and then you're trading at size of 10 Bitcoins, say just hypothetically, and then you're testing from December 2017 to 2018 for 1 year, then what's it gonna be like? So it's gonna show all the return metrics, strategies, and all the curves, Sharpe ratios, beta, alpha values, returns, and so on. So one of the reason why we are so confident with our backtesting is because of our data accuracy. Um, I read in The Economist magazine that the world's most valuable resource is no longer oil but data. Whether this is true or not, whether you believe that this is true or not, so everything I presented up to now are all based on data-driven analysis, and data accuracy is extremely important in order to do good backtesting. For us, the way we demonstrate our data accuracy is as follows. So we took our raw data that's at millisecond level, and we computed OHLCV, and then we also took data, we just purchased other data from other vendors like Kaiko and CoinAPI, and then we created the OHLCV again from their data, and then we compared which data is more accurate against the ground truth, which is from exchange, which are from exchanges. So here we look at the error rates of OHLCV. Obviously, the lower is better. And here we consistently see that our data is more accurate, consistently lower than compared to Kaiko or CoinAPI. And this is true for top 3 coins like Bitcoin, ETH, and XRP, or altcoins like ADA, XLM, Tron, and ZRX, and so on. So here, just to highlight that, for example, our data surface consists of live stream data, order data, historical data, blockchain data, and so on. Yes. Some bonus is that we also are releasing our indicator reports that you can subscribe within next 2 months. For example, here is the highlight where you can look at return versus risk, and I know that many of people use individual indicators as one of the signs, cues to understand the trends. And here if we follow some of the open-close rule based on each different indicators, and here is the list where each indicator lies over return versus volatility plot. For example, this is for BTC USDT at Binance for last 90 days. So these conclude my presentation. Obviously, all of these work are put together based on our team members, and also wanted to highlight that some of the product and services that includes market data, data analytics, our dashboards, backtesting service, and market reports. So that's it. Hope you guys enjoyed it. Thank you.